Good evening, traders. This is not Simon from Kairos Capital Markets. He has been busy for the past week and he promised to be back later this week with a special episode. In the meantime, he asked me to take a look at one of the pairs and give you my opinion on it. For that, I picked pound yen. Now, last week he told you that he expects a move to the downside, just not yet. Let's see if we agree. So on the monthly chart, we can see that the price has been bouncing within this horizontal tunnel for the past more than 10 years, more than 20 years actually. But taking a look at the most recent history, we can see that since 2009, we have been starting to form a head and shoulders pattern. Look, head, left shoulder, and the right shoulder. Now, because this is the monthly chart, it will take a while to form the right shoulder, even though we qualified for. Now, let me delete this to avoid the clutter. On top of that head and shoulders pattern, we can see that using the Fibonacci tool, we're starting to get closer to the 0.5 Fibonacci. On top of that, we have the monthly key line here in red at 155.5, which has been respected before quite religiously. And we also have the 50 EMA around the same area. We have the stock RSI, which has been touching the 100 point at the most recent high. It has dipped down for a bit. Now it's going up. I'm guessing to around 100 again, maybe not touching it, but around there. And so we already have on our theory the head and shoulders pattern, the stock RSI agreeing with the move, the key monthly line at 155.5, the 50 EMA around the same area, and the 0.5 Fibonacci. That's quite enough evidence to support the theory so far, and this is just the monthly. Taking a look at the weekly now, in order for us to complete the monthly right shoulder, we will have to approach an area around here, okay, at 155. No, 158, around there. Let's see if we have any reason to believe we're gonna hit that. So the price has been touching the 200 EMA now with a little doji here so far. Remember, this is the weekly and the weekly isn't over yet, so we cannot fully trust this candle, but so far it's all we got. With the doji we can work out a path for it to follow. Because of the resistances of 200 EMA, the deceleration and approaching the 155, it is possible for the price to either fall down and go back up to 155, or it can go back up to directly to the area that we're interested in. I don't think it will go directly to the area that we're interested in because it has too many obstacles to go through with just one try. Mainly the double top forming, the 155 key area, and the stochastic RSI, which I think will peak out 100 before it reaches the area that we're interested in. So my guess is that it will go to 155, then chop for a little, or go down again to the bottom of the wedge and then go back. Either way. So to clean this up for a bit, we have the 200 EMA and the doji that is forming. From here it will go down for a bit. If this doji will stay the same, I think it will go back to 155, from which it will either chop for a while and then go up, or it will go down to the bottom of the wedge, from which it will go back up. Either way, it will reach here if all things go right, and that is the area that we're interested in to go short from. Now on the daily, we have already a strong move to the upside, which will need some breathing before it reaches higher. We can guess it will move down for a bit where it will meet this trend line and the 50 EMA together with the 200 EMA, maybe with a lower wick, with a big test. That will be perfect, from which it will shoot upwards around 155 to meet the previous top, forming a double top. From there, as we said on the weekly, it can either chop for a while, go down, or go directly to around 158 area. So overall, we can see that the price kind of wants to go down. It's just not ready yet. And until then, it will have to reach a bit higher to form the perfect technical opportunity to take short. And to summarize everything, on the monthly, we have the head and shoulders pattern. The right shoulder will form around the green circle area, which is 158. We will have the 50 MA, the 0.5 Fibonacci, if you can remember. Let's actually draw the head and shoulders pattern quickly. Okay. The 155.5 key monthly line. Also the stochastic RSI, which will coincide with this area by reaching 100 points. On the weekly, we have this wedge, the deceleration if this week ends up the way it looks right now. Again, it can go down, back up, where it will chop for a while, or go back down, from which it will go up. Or if it doesn't chop and doesn't go down, it can go directly to the area that we're interested in. From there, it will meet the trending line, that is the top of the wedge. It will make a double top, more or less depending on how it looks, from which it can go down. And on the daily, we have this aggressive move that needs some breathing. We have this 50 EMA and 200 EMA. The 50 has been respected quite well recently. The 200 not so much, but it has its moments. Regardless, they will all meet around here, where the price can fall off as the move already started. Go back up, from which it will continue the same moves that I explained on the weekly. So there you have it. I hope the explanation was easy to follow and that the trade idea is making sense to you. You can develop your own theory now, and if you see something that I haven't, or if you have any question, you can just ask them in the comments down below. I hope that you had a great week so far, and I wish you a beautiful end of the day. Take care, guys.